Investment banking versus investment management, an overview. Plenty of undergraduate finance majors and Master of Business Administration, MBA, students consider pursuing a career in investment banking or investment management, two intensely competitive fields in the finance industry, after receiving their degrees. These professions offer some of the highest starting salaries in the field, and there's plenty of room for growth for those who are talented and ambitious enough to land one of these spots. If you take away all of the industry terminologies and boil these jobs down to their basic elements, investment bankers and investment managers, sometimes called asset managers or fund managers in the UK, are primarily responsible for channeling money from investors to companies that need capital. Some of the top experts in the investment world can be found in these positions. Investment management is all about investment decisions and asset allocation. This means coming up with investment strategies and directing funds to property, equities, or debt securities on behalf of clients. Investment bankers, by contrast, are deal makers. They work as high-level consultants and analysts for large companies to help with capital-raising strategies. Key takeaways: investment managers help clients by managing their money. Clients can include individuals, educational institutions, insurance companies, and pension funds. Investment managers perform financial analysis, portfolio allocation between bonds and stocks, equity research, and issue buy and sell recommendations. Investment bankers help with corporate finance needs, such as raising funds or capital. Companies and governments hire investment bankers to facilitate mergers and acquisitions, as well as IPOs, and new debt issuance such as a bond offering. Investment management. Investment managers help clients reach their investment goals by managing their money. Clients of investment managers can include individual investors, as well as institutional investors, such as educational institutions, insurance companies, pension funds, retirement plans, and governments. Investment managers can work with equities, bonds, and commodities, including precious metals like gold and silver. Investment managers can have varied roles and responsibilities, depending on the firm, which can include financial statement analysis, portfolio allocation, such as a proper mix of bonds and stocks, equity research and buy and sell recommendations, financial planning and advising, estate and retirement planning, as well as asset distribution. Investment banking. Investment bankers help with corporate finance needs, such as raising funds or capital. Companies and governments hire investment bankers to facilitate complicated financial transactions, including debt issuance such as a bond offering, new securities underwriting, mergers and acquisitions, initial public offerings, IPOs. Investment banking can involve equity and security research and making buy, sell, and hold recommendations. Investment banking firms are also market makers, which provide liquidity or connect buyers and sellers to make the market. Almost every investment banker starts out as an associate or analyst and hopes to put in enough years to reach a role as a vice president or managing director. Special considerations: education and skills. Competition for both careers is notoriously stiff. Investment banking firms are usually only interested in candidates who have graduated from top schools and who have worked previously with major corporate players. It's virtually impossible to find an investment banking associate position without an MBA and strong recommendations from respected professionals in the field. Investment management positions aren't quite as crowded by top applicants, but it's still very difficult to break into major firms. Networking is very important and sometimes matters more than experience or academic bona fides. Many firms use internships as extensive application processes. In fact, some investment management and banking internships are more competitive than entry-level positions for corporate finance or research analyst positions. Undergraduate degrees are preferred in business disciplines, such as finance, economics, accounting, or investment analysis, although degrees from other fields are considered. Some banks look for demonstrated analytical proficiency in specific sectors, like healthcare or pharmaceuticals. Firms are generally looking a strong combination of the following skills and characteristics: strong written and verbal communication skills, analytical and problem-solving skills, demonstrated independence and responsibility, responsiveness and attention to detail, negotiation and client management skills, knowledge of investments, corporate finance and business negotiations, practical commercial expertise, advanced mathematical and technical skills, an ambitious, eager, get-it-done attitude. Salary: